Welcome to the lesson on Japanese candlesticks. Japanese candlesticks are the language of the market and the foundation of technical analysis. If you can read a Japanese candlestick chart, you can start trading the market. Therefore, we'll get you on a fast track trading the market and seeing profits. And we'll do this by explaining what is a Japanese candlestick, showing the difference between a decision candlestick and an indecision candlestick, and how combining a decision with an indecision candlestick can create candlestick formations, and how these formations create points of entry and exits for potential profits. I'm excited to teach you this important aspect of trading, so let's get started. I'm really excited to be discussing with you all about how to read a Japanese candlestick chart, how to literally read the actual Japanese candlestick, as well as the anatomy or formation of that Japanese candlestick, and how you start to take several candlesticks, put them together, and create a candlestick formation, which in the end becomes a buy and sell signal for the actual trader, which is very, very helpful. Now, what you're trying to do as a trader is learn what's called spatial intelligence. And we're going to take two approaches to this. We're going to literally zoom out and take the overview of how it looks, and then we're going to zoom in, and we're going to zoom in on one or two candlestick formations so that you can start to see. So we're going to be zooming out and zooming in, teaching you exactly how to read these Japanese candlesticks. Now, here's the anatomy of a Japanese candlestick. It really all begins with what are called bullish candlesticks, which are green, and if it's a bearish candle, it will be red. Now, the reason they are called Japanese candlesticks is because they literally look like a candle with actual wicks on the top and on the bottom. Envision this is just like a candlestick wick on the top, candlestick wick on the bottom. And so what happens is you have bullish candlesticks with wicks, and you have bearish candlesticks with wicks. Now, what makes one a bullish candle and what makes the other a bearish candle? Well, see, it all begins with where the opening is. Because if you look at this candle right here, prices opened right here. Perhaps bears took control and they took prices down. Now, when they took control and took prices down, this low from the opening to there was a bearish candlestick formation. But then the bulls jumped in and they started to buy more than the bears were selling, which created what's called a bullish candle. And as a matter of fact, they took prices all the way up to this high during the time period and then brought it back down. And then the market closed right there higher than it opened, which is called a bullish candlestick formation. Now, the opposite takes place in a bearish candlestick formation. Prices open up here. Perhaps bulls took prices up for a few moments. You might have had a bullish candle with a green body, but then the bears took control and started to sell more than the bulls were buying and took prices down, perhaps creating a low right here and then closing lower than it opened. And so what you have here is you have what's called full-bodied candles. Now, all these candlestick formations you'll be able to read on all time frames because they form on all time frames. Because what's really taking place is trading is all about price movement against time. And so these candlesticks may form on a 1-minute chart. They may form on a 5-minute chart. They may form on a 10-minute chart. They'll form on an hour chart, 2-hour chart, 10-hour chart, a daily chart, a weekly chart, a monthly chart. If this was a monthly chart, this literally would be the opening of the beginning of the month, and then during the whole month prices fluctuated up and down, but bulls took control and closed higher than it opened, and so this whole month prices went up. Because what's really taking place in any candlestick formation is we're monitoring open, high, low, and close. So when, once again, the close is higher than the open, it's a bullish candle and it's green, and when the close is lower than the opening, it's a bearish candle and red. But like I said, it's all monitoring the open, the high, the low, which are the wicks. The highs are the wicks here, and the close, okay? So this is the anatomy of a candle. Now, what I want to discuss now is I'm going to be going into what are called the decision candles, and we're going to go into what's called indecision candles, as well as indecision candles that are really buy and sell signals. But if you take a good look at this chart, these are your decision candles. You have a bearish decision candle here. You have a bullish decision candle here. This is a bearish decision candle. This is a bullish decision candle. So let's discuss decision and indecision candles. We've discussed already the bullish and bearish decision candles with highs and lows, which are the wicks. So let's discuss what is an indecision candle. This is called a spinning top, and this is called a doji star. Now, what is taking place with a spinning top is this body can be bullish or bearish. It can be bullish or bearish. And so if it is bullish, as it is here, prices opened up here. Perhaps bears took prices down, created a low. When bulls jumped in and took prices up, it left the wick behind. And then as soon as prices went beyond the opening right here and started to rally, the actual candle was bullish, creating a high, and then bears brought it down, and they closed near the opening, which is called an indecision candle. Very different. You can see the bodies of indecision candles are very small compared to the bodies of decision candles. This is called a doji star. Now, many times these doji stars open and close at the same price, but sometimes you'll have a small bearish body, and sometimes you'll have a small bullish body. This can be bullish or bearish. But see, prices open up very close to where they close, and at one time the bears had control, and this was a full-bodied bearish candle at one time. But when bulls stepped in and brought prices back up, it literally became a bullish candle with a long wick to the south, and then the bears came in, brought prices back down, and closed near or at the same price that it opened. Once again, these are called indecision candles. See, the bulls don't know whether they're going to maintain control. The bears don't know whether they're going to maintain control. And literally, this is called the war zone. It's where the bulls and the bears are really fighting for control, because trading is all about taking control. Bulls want the prices to go up. They want to maintain prices going up, making higher highs and higher lows, which is called an uptrend. And bears want to maintain control by making lower lows and lower highs, which is called a downtrend. But see, they're constantly fighting over price. Now, this is what's called a indecision candle. Now, if you really look at this, this is called a hammer. If you envision grabbing the bottom of this, and this is the head of the hammer, see, that's how I remember it anyway. But if you look at this, prices opened up here. And then at one time, this was a full-bodied bearish candle. And so then when it was a full-bodied bearish candle, bulls jumped in, took prices up, see? When it was a full-bodied bearish candle, there were more sellers than buyers, more sellers than buyers, more sellers than buyers, more sellers than buyers. And then all of a sudden there became more buyers and sellers, more buyers and sellers, more buyers and sellers, taking prices up. And then it closed near the opening, creating what's called a hammerhead. See, so this is what's called a hammer. Now, if you really think about what's taking place, is see, bears tried to bring prices right down and take control, but bulls took control and brought prices back up. This is an indecision candle that really is a decision candle, because it's communicating to the trader that prices are getting ready to shoot up. That's what the long wick means at the bottom. Now, if you look at this Dragonfly Doji here, this opened up here, bears took control a little bit, took prices down, and then bulls took prices all the way up, created this high. At one time, this was a full-bodied bullish candle, but during the time period, the bears brought prices back down, and this is a bearish signal. See, when you have long wicks on the north side of a small-bodied candle, that's a bearish signal. And when you have long wicks on the south side of a small-bodied bullish, that's a bullish signal, meaning prices will usually go up after that, just like prices will usually go down after this one forms. Now, if you take a good look here, what you see here is you see your full-bodied bullish candles that we discussed. And then you start to see what are called your indecision candles, right here, indecision, spinning tops. These are bearish spinning tops. And then you see a bullish hammer that forms. Now, once again, to become a good trader, you have to develop your spatial intelligence. And that's what this lesson is all about, developing your spatial intelligence, being able to read these charts, being able to read these candles. Now, once again, you see a chart with many types of candlestick formations. And now we're going to be talking about the doji star. So this is the, these are called spinning tops, doji stars. And you know, I call them spinning top doji stars because they have a little body. But truly, if it was just a flat line here or a flat line there, it really would be called a doji star. But because the body is so small, I don't want you to confuse these with a true spinning top. A true spinning top is going to have a body like that. These are very small bodies, which are your doji stars. They're called doji stars. So take a look. Once again, we're zooming out so that you can kind of see the different candlestick formations. I want your eyes to kind of scan over these charts and over these candlesticks to see if you can spot full-bodied candlesticks, if you can start to spot indecision candlesticks, if you can start to spot decision candlesticks, and if you can start to spot the doji stars that we talked about. Now, what I want to talk about next is what are called dragonfly dojis. This is a bullish dragonfly doji We talked about long wicks on the body create a bullish movement right after. You can see there is the bears were in control, indecision came in, but communicated to the trader, hey, because of this dragonfly doji here, this was going to take off. And so here it took off to the north, and then we have communicated to us a long wick to the north, which is a bearish signal. Once again, these can be bullish or bearish. I'm going to zoom out again so you can literally see the candles again, okay? So what we're going to talk about next are what are called gravestone dojis. Now, this is a dragonfly doji. This is a gravestone doji. What really is the difference here? If you take a look here, this one does not have a wick on the bottom where this one has a wick on the top. So stay focused on this. Either way, this is a bearish signal. Now, here is your bullish dragonfly doji. This is a bullish. The bears were in control. Think of it. At one time, this candle looked like this. But then bulls brought the prices back up. They intervened, and there was more buyers and sellers, and closed higher than it opened. Small body once again, large wick on the south. Take a look once again, and see if you can see full body with indecision candles, what you've learned so far. Indecision candles. Let's talk about spinning tops. Now what we have here is we have a spinning top, which is an indecision candle with a bearish body, and then we have a spinning top with a bullish body. Either way, this is the war zone that I talked about. A lot of indecision going back and forth. And I'm going to zoom out again, see if you can find those spinning top. See, here's a spinning top right here. Here's somewhat of a spinning top, a little larger body. Here's another spinning top right there. Can you see it? Okay, now let's take a look here, because what we want to talk about is we want to talk about what's called a hanging man. This is a hanging man right here. I want you to envision this being a rope, and I want you to envision this being the head of a hanging man. This is a bearish signal. Prices were going up. And then all of a sudden you have this huge wick on the north side of a very small body, a hanging man. To where this is the opposite, which is that hammer we talked about. Usually prices will go up because you have the long wick on the south side. You have the long wick on the north side. Prices will go down. Prices will go up. And so once again, I want to zoom out and help you understand that you are looking at what's called a Japanese candlestick chart. And Japanese candlestick charts are monitoring price movement, which is right here, price movement against time. This is time. And once again, these candlestick formations form on all time frames. And so we're getting ready to talk about when you start to mix two candlestick formations together, or perhaps three or four, you start to get buy and sell signals or bullish and bearish candlestick formations. And what I'm going to be talking about next are the actual formations and how they really help the trader find trades to become successful.